Local trade remains subdued today, carrying on with the week's losses. Markets closing in the red yesterday amid losses in retail sector stocks, with the rand weak against the dollar. In the U.S., gross domestic product improved less than expected in the fourth quarter of 2023. Chief Investment Officer and founder of Makwe Fund Managers, Makwe Masilela, joins us now to look at this and some other key business stories this morning. Makwe, good morning. As always, we kick off with an overview of the latest market moves.
You know, fortunately, we managed to open in the green after struggling for the past 3 days, and I think it's a question of people are looking for bargains, but we're starting the session being worried, and we've got this uncertainty, looking forward to the inflation data that will be released today. And the reason being, we're trying to get some clues, you know, when it comes to the interest rate path going forward. And yes, markets have cemented the idea that definitely we'll get some rate cuts, but the question still remains by how much and when. So markets are looking for that kind of clues to see what's going to be happening. And also locally, we'll also be getting our producer price inflation numbers.
Yeah, that trend certainly continuing in countries around the globe in terms of interest rates and managing inflation. South Africa's private sector credit growing by 3.16% year-on-year in January 2024. Missing market forecasts and slowing from the rise of the previous month. Talk us through the significance of this data and what it means in the context of South Africa's economy at this moment.
You know, number one, our economy is more than 60% driven by consumer demand, just like most developed economies. And for most people to continue to be able to spend, they need to have access to credit. So now, if we see that a credit extension is not that exciting, that tells you that consumer demand will be affected. As a result, our GDP won't be that great. And reason being, interest rates have been at elevated levels. And yes, we can see they've been going up, but unfortunately, those numbers have been increasing at a decreasing rate, an indication that number one, the lenders are very strict when it comes to the lending criteria, and as well, high inflation, people are now struggling to have access to decent credit. So as much as they still get credit, it's no longer that exciting, and definitely that will be reflected on our economy going forward, especially when we start looking into these things like our retail sales numbers. So yes, increasing but at a decreasing rate.
Well, let's look at Implats now, and they've produced what looks like firm production sales and cost performance for the 6 months ended 31 December 2023. Help us make sense of that overall performance.
It was expected for production to increase by almost 18%. Remember, they've included Royal Bafokeng Platinum that they've bought. We remember that fight that they've been having with Northam, so ultimately they managed to acquire it. So that helped when it comes to the wholesale. But the clearer picture of the industry, we can see and we know that there is some industrial destocking, and also we've seen that investor sentiment is negative, and hence the pricing has been very weak, and that impacted their revenues, which decreased by almost 25%. And also when you look into their profits as headline earnings per share, decreased by almost 78%, and part thereof is because they had to issue more shares when they were settling part of the consideration they had to pay for Royal Bafokeng Platinum. So that also had an impact on their headline earnings per share, and it's also not surprising for the guys not to pay us any interim dividend.
All right. Well, thank you so much for the updates. That was Makwe Fund Managers, Makwe Masilela, just giving us a quick overview of what's happening in the markets this morning.